Dear trading friends, a lot has happened with Bitcoin and also with Ethereum, but also with the altcoins. We'll go through all of that in detail today. We'll take another look at the huge liquidation below us, which is actually not as big as it used to be. I'll also go through my theory about that in detail in a moment. But what has happened with Bitcoin now? We've had a structural break to the downside. In the last video, I said and shared with you that I was waiting. I can't go short here while we're still making higher highs and higher lows, but what has happened now, especially on the hourly chart? As you can see, we've made a new low. That was our low. This means we've broken through the two previous higher lows to the downside and would now officially be in a bearish structure. As long as this continues and isn't just a fake out to the downside. We see this not only on the 1 hour chart, but also on the 4 hour chart, just so you can see it as well. Here too, we've broken through the low to the downside the last two, which I find very interesting. As I said before, if that happens, then I want to enter a short position on the next possible retest. And where would that go? Not at all like I usually do with my trading strategy, but down here, as you may have already noticed, if we get a correction now, my new long entry would be at the 0.5 Fibonacci or 0.618. If you don't know my trading strategy yet, check out the second best video on my channel, The Simplest Trading Strategy. And if you aren't using it yet, you should. There I show everything in detail, how I proceed. You'll also be introduced to an indicator that can help you identify all the swing highs and swing lows. By now, it's the second best. Thank you so much. Over time, it will probably become the best video ever on my channel. If you're interested in trading bots, and by that I mean, for example, spot martingale bots, which are just incredible and keep working again and again, and I even have one currently running here that's generating profits, then check out the very first video. That would be 100% passive income on autopilot. It really motivates me to keep putting out great content for you when I get this kind of support. So don't forget to like, comment, and maybe even activate the bell so you won't miss anything anymore. Now let's get back to the Bitcoin analysis. This is really, really exciting. What are we going to do now? Of course, we're going to compare this with the liquidation heat map. We can see that at this moment, we're getting a massive influx of new short orders. I can imagine that this liquidity will be taken out. And accordingly, at this point in time, I have a bearish outlook. If anyone copies this trade, it's always at your own risk. This is not investment advice. I'm just showing my trades completely transparently how I proceed. And what exactly I do. Let's take the upper target levels and move them over here. I don't want to forget that either. So these would be my target levels, which I already mentioned several times in the last video, where I also said that we might still move higher. At this point in time, we're playing out this bearish divergence. What else do I want to quickly do here? I'm turning off the RSI band here. In the last video, I talked about how on the 4 hour chart, we're forming a bearish divergence. A falling RSI in contrast to that. We had a rising price and that actually played out earlier than expected because I would have expected that we might still be able to test $128,000 or $130,000 as target levels. Maybe it will still happen and my current trading strategy that I'm entering now might not work out at all. But for me, it's super interesting simply because of exactly this structure break that we had. If we look at this here, we formed a small rising wedge with a breakout to the downside. If we adjust this a bit more precisely. In this case, I'm going a bit deeper here. We moved downwards and are still continuing in that direction. Accordingly, I'm now adjusting this with the trading strategy and with the liquidation hitman. So my possible long position, as I mentioned, what we have below would be the 0.5 or 0.618 entry. Let's first look at the long position. What could support this? So here at the 0.5 Fibonacci, we can see it, and I'll draw it in again. It's very, very interesting to see where this is located. In the past, we've had a rejection here. For a very, very long time, we've had support here. Just look at the left side, how interesting this zone was. Then it went down, then back up, a bit of a retest, down again, another retest here, further down, and then another rejection here. And accordingly, because this is a very valid zone, for me, this would be a possibility to say, okay, after this breakout up here, maybe we go down here and test the 117,000 and move up, or maybe even go further down. The 0.618 that we have, again, it's interesting to see where that is. It's also a very, very valid zone. I'll draw that in as well, depending on what the price does next. We've had support here, resistance here, another resistance, and again, you can see how well the price actually reacted in this area. So as of now, at the current state, if the price doesn't move higher, there's the possibility that we go down here and use this bounce to drive the price back up again. That would be healthy after this massive surge. How much was that? Without any significant correction, we've risen almost 15% here without having had a stronger correction or a retest of an interesting zone. And that's what I'm speculating on now, a possible retest. You know, in the last videos, I always said we have 16 billion below us at 107,000 US dollars. We need to take a closer look at that in the liquidation map before we continue with the analysis. Because now, on a weekly basis at Binance, Bybit, and OKEx, we no longer have such deep insight back to 107,000 US dollars. Despite all that, we have accumulated a total of 9 billion in long liquidations up to 112,000 US dollars. But as you can see here, we've now also built up a lot of short liquidations above us, which currently amount to nearly 6 billion at a price up to 130,000. And if I go into the liquidation map and set it to 1 month, you'll also see that this has decreased a bit on Binance. There's still quite a bit left. On Binance alone, we have just under 5 billion, accumulated at a price of around 107,000. If we add up all the exchanges, I estimate that we're actually still at around 15 billion. Despite everything, it's not shining as brightly anymore. I can also go back here again. It's actually very, very important now, which is why I'm saying that I'm testing the long positions again. I don't want to confuse you and say, hey, there's no point down there anymore. No, we still have it. But remember back to the last videos how brightly everything was shining here. We still have quite a bit lying here. But if I switch to a monthly chart here and add it all up, we're at about 10 billion. That's still a lot, but not as much as before. What could have happened here? With the upward movements, of course, we had a lot of liquidations below us and the first part closed their positions here. That means the price went down. Closing positions, of course, also takes away some of the upward momentum, and at the same time, the liquidations down here would be significantly less. Still, on the monthly chart, this is of course a very, very interesting level. Just so you're aware. In this case, if I enter my long positions here, I'm risking a possible stop loss twice, which I would really accept here. Of course, this is also with the corresponding risk-reward ratio. But at this point in time, if I go back to the hourly chart, I'm speculating on a possibility where I say, okay, I want to reach these target levels down here. Now I'm looking to see if I can get my retest here with the 0.5 or 0.618 Fibonacci. That means, what do we have here? Is that drawn in very nicely? Yes, that fits. Now that should be about right. We have the candle at the bottom and at the top, so I say I'll enter here now. Let me make this a bit smaller so we can see it more clearly. Exactly, that's much better. Entering at the 0.5 or 0.618. Now let's take a look at the prices in the liquidation heat map on the daily chart. That's where it gets interesting. 123,364 to about 124,000. If we now go back to the daily chart and just include that, then we see that at this point in time, a massive amount of short orders are coming in here, and all of that extends up to about 123,950 US dollars. And if I compare that here now, 123,900 would be just below the 0.618 Fibonacci. Now, at the current moment, technically speaking, I also find the 0.5 very interesting, which means I will also take the risk on that, even though I am of the opinion that we could rise higher due to the liquidity, which might even happen. But what do we see here exactly? The 0.5 Fibonacci, and that's very interesting. We see that we had support here. Once support, twice support in the past, 3 times support, and support again. That means the bulls have been defending their positions here the whole time and have pushed the market and the price back up, while with the last support, the bears took over and pushed the price down massively. This is possibility number 1, why I say 0.5 could be valid. Possibility number 2, fair value gap. If you take a look, we have a fair value gap right at this candle here. Closing this fair value gap would actually dip below the 0.5 Fibonacci, but because we actually had support here, which now acts as resistance, plus the liquidity that's here, this would now be a reason for me to consider entering a short trade. If we take another look at this on the 4-hour chart, let's open up Big Beluga here as well, we can see it here too. Yes, the fair value gap on the 4-hour chart would actually be even better and even tighter here. And that's exactly what I'm speculating on. You know my approach. When I enter my short or long positions, I actually make my entry at the Fibonacci level, even if it might not catch the price perfectly. And I actually believe quite strongly, based on the liquidity we're seeing here, that this is what will allow us to move further upward. But the first entry would be here. I don't want to miss the chance in case we get a reversal here, also based on the technical outlook. And the second entry would look like this, so that I place it further up here. 0.618 and take the same stop loss again. The stop loss would be here at about 124,658. Let's see what would be here. That would be in this liquidity gap. If we move higher, then I would have hit the stop loss twice, and that's just how it is. But I want to take this opportunity for myself simply to really catch this possible trend break to the downside. In this case, though, I wouldn't take my take profit here. I would only take partial profit at break even. Because for me personally, I see the possibility of going down to 117,000 to 115,000 US dollars. That would mean for me that at the 0.5 level, I would take something out of the position, 30 to 50%, but I would actually let the rest run all the way to the 0.5 Fibonacci. And depending on which trade might work out, I have a much better risk-reward ratio again. Once at 1 to 9.65 and the second one here at 10.64. So potentially massive profits that you could take here. Of course, as I said, provided that we don't just have a fake out in this structure break and continue moving higher. Because from a daily chart perspective, if we look at all of this on the daily chart here, it's nothing more than a small correction. And we might not even move downward at all. But what would happen at the 0.5 level? You can see it again here. Daily chart, the 0.5 Fibonacci level, it's just so nice to look at. Take a look at this, guys. The 0.5 Fibonacci is exactly where we had our trend break here. That would be a wonderful retest. I hope you can see all of this despite all the markings. But I mean exactly this area here, I mean this area right here. And take a look at how the daily candles have been reacting here the whole time. A 0.5 Fibonacci as a possible entry is super interesting to me. Now let's look at liquidation, 117,000 and 115,000. What would happen here then? We have something at 119,000 on the daily chart. But of course I'm also interested in the 3-day and the 1-week chart because some time has passed. That would be here at 119,000, so currently nothing from 117,000 is included, I have to say. Now let's look at the weekly chart, which I haven't done yet. I'm really doing a live analysis with you in this video. Maybe there's something interesting here, and there it is. You can already see what is really becoming interesting for me now. This liquidation, which is very pronounced, extends up to about 117,300, where we have stronger liquidations, and it tapers off down to around 115,000. 650, and here we see that 117,392 would be the Fibonacci entry, and exactly in this area just below it. And now something interesting comes up, because as I see it right now, I could even imagine it going further down. But the liquidation heat map would fit perfectly on a weekly basis up to here, around 117,400. What did we say? 117,392, so it would actually be almost perfect. We could take another look to adjust it a bit more precisely. To the low candle at 117,370, so that would now be the possibility. That would match up wonderfully, but there is also the possibility of it dropping down to 115,750. If it goes even further, 115,750 would be just before this price area. Let's quickly draw in the 115,750, so it would be about here, and then let's bring up the big beluga, and we can see here, yes, the fair value gap, because we still have one below us. Exactly these areas. I'll make this a bit more difficult now. We've reached the take profit, as you saw, but what's very interesting is that we have a value gap. This strength, it was very strong, and we haven't filled it yet. So, it's this long candle where nothing has happened in between, which is why it could actually happen that we go down, trigger the 0.5, maybe even go further down. Because this midline in the value gap is also a very interesting price zone that can act as support. And if it does go even further down, we still have the last part of the liquidation heat map here within it. We mustn't forget, the further we fall, the more liquidity will build up below. Of course, you always have to keep monitoring that actively. But the second entry for me would be the 0.618, which is very interesting if it comes to that. That means at the moment, I'm leaning more towards a possible short position here, also as a potential support. And you might also know this from my video where I show exactly how price action works. You can also find that in the playlist, Learn Trading Step by Step to Become a Pro Trader. There, I also show, and you can see it very clearly here, when we have a change of character like here, it's very often the case that we get a retest down here before things move higher. That's currently my strategy, how I'm approaching things, and accordingly I'll place my trades that way. In the next videos, we'll see whether it actually plays out the way I imagine. What we'll also do is take a look at the VPVR to see where the next possible zones are that are super interesting. We can see here now where we've just entered, I'll zoom in a bit more, we've actually moved into a small volume gap. But that doesn't mean that everything will hold here, because where do we have the first larger volume? That's exactly this area here, do you see it? And where is this volume located? Roughly at the 0.5 Fibonacci level. If that doesn't hold, we have the point of control. At this point in time, if we include all of this, how far back does it go? Back to July. Both the point of control and the 0.618 level, this means that with both options and also with the volume profile, I'm in a very stable position here. And these could be the next support zones. If these don't hold, I still believe that, just as previously mentioned, on the 3-month or 1-month chart, you can see it there too, we could reach the lower area. At the moment, that's quite a bit less, but despite everything, I still think we could go there. But of course, I also want to adapt to the market because nothing stays the same. And as you've seen now, while everyone thought we would keep moving up bullishly, or at least the majority was still bullish here, we've now seen the first possible correction, which could push us into a small short scenario. That's my approach with Bitcoin. Let's take a quick look at Ethereum. With Ethereum, we actually have something very, very similar. I also said in a video that I would keep adjusting this again and again. Here too, we now have the opportunity to adjust everything. If I go up now, the long trade is still open. That was the entry we had, which is simply wonderfully in profit. That doesn't mean it will reach its target level up here without a correction. By the way, 4,970 isn't correct. It should be a little less. 4,958, that's my target level for this long trade. And with a possible correction, that's how it would be for me now. I'll make this a bit smaller here. So that we can see here, again, sorry, I'll zoom out a bit here. Where are the levels of the volume profile? The first possibility is right here, for example, exactly at this level where we've now also broken down through. If I zoom in a bit, you might see it better. And now we have a retest. The next possibility would be down here. That's the new volume profile, which could also coincide with the 0.5 Fibonacci entry, among other things. Despite everything, I remain firm. The 0.618 is super interesting to me. The 0.618, what do we have here? The retest of this breakout level that we have. We also talked about that. After we had consolidation, rejection, and then broke above it with this long candle here, we still have the chance to pick this up. Here too, I can turn on the big beluga again, and here as well, we have a fair value gap. Accordingly, the 0.5 entry isn't really that interesting to me personally. Why isn't the 0.5 entry that interesting? We have a fair value gap directly below, and at the 0.618, there's also an order block lying just below it. I wouldn't risk entering already at 4,290 here. Maybe it won't even be a trade. But when I look at it now, it seems like we don't have any valid opportunities here, technically speaking, which is actually super interesting. Although that actually wouldn't be uninteresting. Sorry, I have to revise that. What would be interesting? The possibility here so that we have full support. But if that ends up right in the liquidation hit zone where everyone is, if we go there, I do think we could pick up this fair value gap here. And then the exciting question would be, will we actually reach the 0.618? Or what would be even more interesting? Will it just be the fair value cap exactly at this midline we have here, which would also coincide with the recent highs here and also with this candle close, and maybe we go down from there? That means I could risk a trade here depending on the upper part at the 0.5 entry. Now let's take a closer look at the liquidation heat map. For the second one, I might even enter here. But let's see what the liquidation heat map says about this. So on a weekly basis, we see strong liquidation up to 4,288. What do our entry levels say? 4,288. That would actually just look at how well that could match up if it really comes to that. That would be the 0.5 entry. I'm actually surprised despite the fact that we have this fair value gap right below it. So we can say there's extremely strong liquidity here, which is also building up freshly right now. We'll take another look at this on the 2-week chart. And here as well, it actually looks very similar. So the 4,200 or just under 4,300 US dollars are very interesting because the next level would then be 4,204 US dollars. 4,204 US dollars. Yes, that would be our fair value gap roughly. That simply means I would find it super interesting if that doesn't work out. And this fair value gap is just way too exciting for me right now, if we reach it, whether or not we pick it up. But just now, where did I set this line? The midpoint of this fair value gap at 4,215. And where did we have, as I said, the end of this liquidation at 4,208 US dollars? So that could get very, very interesting so that we might correct exactly up to that point if we do correct. All my analysis, all my trades, why do I do this? I have enough long trades open. Overall, I'm bullish. Here, this Ethereum trade, which now has almost 18,000 in profit and another 3,500 in unrealized profit. And then I also have, I have to go over here, a few positions open on PIONEX. So I can also play around a bit here and hedge with short positions to take advantage of the opportunities when the price goes down and my long position's unrealized profit drops. I can balance all of that out with a short position. And that's simply my approach with the analyses. Exactly. That would be the same possibility now. Would I immediately short at 4 and 1? Absolutely not. It's the same here. What would I do here? Even though it was very close, I have to say, really just very, very close if we look at it. But I'll show you what it would look like for me now if we go down, a possible recovery. Also here, into these fair value gaps between 4,583 and 4,600, that might possibly happen. I'll turn it on. Big Beluga also points this out, exactly what I mean. It's a very, very interesting zone with the fair value gap and the 0.5 entry, so that we could see a possible price increase up here and only afterwards go down and reach these target levels. I won't trade against the trend. And here we can actually see something I noticed earlier. We have a rising price here, just like with Ethereum, but with a falling RSI. So that's a bearish divergence. Will this now play out completely? We'll see. But we haven't seen a retest here yet, at least not with Ethereum. What I see here now, let's take a look at where a possible retest could be. If I go up here, that would have been a possible trend structure, so I'm actually a bit surprised myself that this could be an option. If we now go higher, move in there, then we would have a possible retest on this trend line, which could then be followed by a correction. As I said, I could be completely wrong and we might keep going higher, but this is just what I'm personally testing right now. What else would support the idea that we could see higher prices here again? What were we? 4620 to 4683, the one-day time frame. With Ethereum, it's incredible how massively Ethereum is being shorted right now. We see a massive cluster here at 4624. What did I just say? 4624. Just take a look at that. This cluster that I just showed earlier would now, at this point in time, be the 0.618 entry. And that would match up directly with this cluster. How far does that go? Up to 4672. Accordingly, you would of course have to adjust your stop loss and your risk-reward ratio as well. In my case, it would look like this should we move up, and that actually happens. So I think that's really interesting. Really very, very interesting. I would use lower leverage here and see if I can't, somewhere in this price range, yes, set a stop loss. And if we continue to move higher, maybe enter again at the 0.786. But even here, it's not like I usually do, where I say I'll exit at 0. Instead, I would close half the position and then speculate on lower prices to have a better risk-reward ratio. Those would be my current approaches. As for trading bots and the altcoins, I will probably update you tomorrow morning in a live stream. So for me, it's morning. For you, it will be around 9 or 9:30. I'll do a live analysis for you again and open new trading pots. We'll take a look at what the market has done in the meantime, but this would be my current setup, provided my analysis plays out exactly as I imagine it right now. That means in a few hours or at the latest tomorrow, we will hopefully see more. And until then, I'll say ciao, ciao, and see you next time. Don't forget to like, don't forget to share, and for everyone who hasn't joined yet, a subscription for my peace of mind.